Hello, everybody. Charles Cannon, Certified Financial Planner here for the Lifetime Income for You channel. As I do these videos, a lot of times I say this is the most important video I've ever done. And I realized every time I say that I'm right. Because, folks, the stakes are getting higher and higher as we get closer and closer to the financial event that we've been talking about for months and months, which is recession. And today we're going to take a look at some of the things going on all around the world that is going to lead right to that recession. Today we're going to call it financial Jenga. I want you to look at that Jenga tower, folks. The higher and higher that tower goes, the more at risk the very top. And in 2023, we have had what we call a melt up in the market. What does that mean, melt up? Well, it means the stock market has gone up all year. It's replaced most of those losses from 2022, but there is no macroeconomic reason for it to have risen as much as it has. It's being driven by the 7 main stocks that are all involved in AI. So it's a fear of missing out mentality. Boy, that sounds a lot like the year 2000, doesn't it? When we had those internet stocks were going up with no price to earnings ratio at all because they had no earnings. But your money and the 42 years that you worked are those blue tiles at the very top of that Jenga tower, folks. And if that Jenga tower goes over, when that Jenga tower goes over, it's your money that spills on the floor, folks, and it's gone. Let's take a look at everything that's going on out there and see if you agree with me. First, China has had their big moment. It started this weekend. One of their largest real estate investment trust companies has been missing payments, it's been reported. We have heard time and time again that China's economy was in bad shape. The U.S. has, I believe, been trying to work with them to get some work done by the government to help stabilize their economy. The government's not doing anything there, folks. People believe, economists believe, that this is their Lehman Brothers moment. This is one of their largest financial firms. And if they are bankrupt, it's one of those too big to fail type of moments, only it happens in a country that doesn't do the bailout. And it will extend throughout their economy and throughout the world economy. Don't believe me? Take a look at the companies, the US-based companies that are in your portfolios. You may not know they're in your portfolios, but they are in your S&P 500 fund, they're in your technology fund, they're in your financials, they're in your dividend funds. Over and over again, I find that when you have large stock portfolios and you're in funds, either mutual funds or ETFs, you have a lot of repeated business in there, folks, a lot of overlap. And this is exactly what you're going to see are these names are in all of your holdings. And they are very dependent upon the Chinese economy. Look at those top 2 names, the Sands and the Wind. Just in Macau, the money they've poured into the Chinese casino industry is unbelievable. NVIDIA, Silicon Labs, AMD, Qualcomm, Wolfspeed, Monolithic Power, Broadcom. The list does go on, but look at the percentages of business from each of these companies that is Chinese-based. Do you feel like your Jenga tower is intact, folks? Is it starting to lean? Somebody just poked out. Somebody just poked out on the bottom shelf. Trouble is off in the future, folks. We just don't know how far. Closer to home here. Here's an article. It was on CNN. Now, this article was from last month, but it's talking about credit crunch getting worse, bankruptcies are up. But look at that first sentence in the actual article. The strength and resiliency of the U.S. economy during the first half of the year defied the expectations of economists, who largely expected the country to fall into recession. That's what I mean when I say melt up. Economists can't explain why the stock market's up this year because there's no macroeconomic reason for that to have happened. It's the main 7 technology stocks have driven the S&P forward. And so if you turn on CNBC or whatever business news you like, they talk about the S&P 493, right? Everything else is lagging behind. We have the fear of missing out run up in those technology stocks based upon the development of AI. Everybody loves to use the Chat GPT. I love it. But that is leading to a lot of hope and a lot of fear of missing out. And that's leading to the rise in the stock market, not anything that is true economic basis. Here's an article, it's even newer. This is brand new. The S&P broke below its 50-day moving average last week. That is a clear signal that it's ready to move down. Most experts had targeted September as the next big event when we would start to see recession set in. But now they're thinking that China may trigger that earlier, right? When you play Jenga, it doesn't matter if you take a tile from the bottom, the middle, or the top. It can shake the whole foundation and it can topple at any time. And remember, it's your 42 years of hard work and your money that's at the very top of that Jenga tower. This is Charles Cannon, Certified Financial Planner for the Lifetime Income for You channel. I want you to remember that no one should care about your portfolio as much as you do. Don't allow yourself to not pay attention to it. Don't allow yourself to not be educated. Don't be greedy that you want that last little run up before it goes down. All those types of things, to me, they're inexplicable. When you have retired, you have won the game, folks. Take your winnings off the board. So I want you to remember, lifetime income is the most important part of your retirement. Get on my schedule and let's protect that retirement soon. There are a few spots left. Bye now.